50-year mortgage? What? Somebody call Dave Ramsey. Is this really a thing? Well, it's a proposal. Sounds like it could be a thing. President Trump's recent proposal to introduce a 50-year mortgage has sparked a lot of buzz. Yeah, sure has. And it's got some people rethinking what long-term debt really means. 50 years! All right, we're going to unpack whether this is a financial breakthrough or a debt trap. Maybe a death trap, because you're probably going to have to die before it gets paid off. 50 years, my goodness. And that's especially for folks close to or in retirement. Yeah, how are you going to outlive your mortgage in this case? All right, so what's this all about? Well, the 50-year mortgage would stretch home loan payments over half a century instead of the usual 30 years, or what is it that Dave Ramsey likes, 15 years? Federal housing officials are reportedly on board, touting lower monthly payments as the big win for buyers facing today's sky-high housing costs. And this could make it easier for more people to qualify for a home, as monthly cash flow and debt-to-income ratios, well, they would look better. So who does this really help? And who should be cautious and just run the other direction? Lower payments sound great, right? But let's look beyond the surface and see how this impacts folks, especially as they get older, age 50 and beyond. Lower payments mean a higher lifetime cost. The main attraction is a lower monthly payment. So let's say it's about $283 less per month on a $400,000 loan compared to a 30-year mortgage. It's easier on your budget today, but the total interest bill nearly doubles, going from around $487,000 to over $900,000 over the life of the loan. And you build your home equity rather slowly with 50 years. A 50-year term, you'll build painfully slowly, let's say. It could take you nearly 28 years to reach half, 50% ownership in your home, where you'd have 50% equity, 10 years longer than a traditional mortgage. And for folks nearing retirement, do you really want a mortgage payment hanging over your head until you're 90, assuming you live that long and beyond? Lower payments may help right now, but the commitment lasts for decades. If retirement is a goal, consider the stress and lifestyle limitations of carrying debt that far into the future. All right, and there are some special concerns for retirees and pre-retirees. So it's mainly aimed at younger folks, this proposal. Younger buyers trying to break into home ownership who are just struggling now to come up with down payments and to have enough cash flow from their jobs to afford a mortgage payment. For older adults, here are some things to consider. Your housing stability. If you plan to age in place, meaning stay home and not move, the lower payment might give you budget room, but is it worth almost doubling your interest over the rest of your life? Moving or downsizing. Yeah, slow equity means if you need to sell or move within the next decade or two, you might not have built up enough ownership to cover transaction costs or get a strong return. And your retirement cash flow, yeah, that's a big concern. The extra room in your monthly budget could fund investments, health expenses, or even travel, but at the cost of what? Financial flexibility, decades down the road? Well, here's 3 things to think about, and none of this is a recommendation to say do or don't, but just things for you to ponder and think about. How can you make sense of the proposal? Well, here's how I would suggest protecting your finances and making the most of any mortgage changes. You've got to compare the total costs, not just payments. Always look at lifetime interest and equity projections alongside monthly payment numbers. There are plenty of online calculators, and most of those are free. Plug in the loan terms and see the results yourself. And align your mortgage decisions with your retirement plans. Ask yourself, will this mortgage fit into my retirement lifestyle? Do I even need payments after age 80? Consider how carrying debt aligns with your personal goals and your timeline. And here's a biggie: consult with a professional before jumping in. 50 years. Yeah, a 50-year mortgage? Well, that's new territory. Talk to a trusted financial planner or a mortgage expert before making any decisions. They can help you weigh risks, avoid costly mistakes, and explore other options suited for your age and financial standing. All right, 50-year mortgage? Yeah, it could be a game changer for some, but for older adults approaching retirement, well, critical to weigh short-term budget benefits against the long-term reality of lifelong debt and interest. And okay, it's not a thing right now, this 50-year mortgage. It's just an idea, a proposal. There's legislation passed back in 2008 that currently limits mortgages to 30 years max. So this just wouldn't work. We'll have to see what happens. Always make sure your mortgage fits your retirement goals, whether it's a 15-year, a 30-year, or anywhere in between, not just for your wallet today. If you want to learn more about protecting your cash flow while planning for retirement, yeah, you can check out some of my other videos. In the meantime, thanks for watching, and I'll see you in the next episode.